Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. I'd like to offer you some charts today, and the first one I'd like to look at is the euro against the dollar. Now looking here, we have a bearish harami yesterday to counter the previous session's big bullish long white Mariposa. It seemed a half-hearted counter as it was more based upon the overhead resistances of the mild congestion at 108.80 and the very recent 50% Fibonacci line at 108.90. Support was provided by the very recent lesser Fibonacci level at 108.30, which is just ahead of the combination of the old gap and congestion between 108.20 and 107.77, plus the finessed diamond uptrend currently at 107.99. Now, more on this diamond later. Today, we've started to move up again towards the 50% Fibonacci line. Now, those of you who have had the opportunity to see my daily charts may be wondering, what is that big diamond thing you've drawn from late January through to late April that's even below the market low back in March? Well, it is exactly what it says on the tin. I've placed a possible diamond formation over the action from late January to date. It's only a proposal so far. It has only started to be confirmed, though I'm not yet certain if it's a diamond bottom, diamond top, or a continuation pattern. It's too early for that. And I've finessed it a bit to make sure may do so again today. However, the current version has a prospective uptrend running through the old gap and congestion at about 107.99. One final piece. Last week was a bearish weekly harami, so remember that. Next chart to look at is cable, aka sterling against the US dollar. A second bullish white soldier and a suitable follow-on yesterday to the previous session's very, very interesting key reversal up. Also the second consecutive close over the key recent 50% Fibonacci line at 123.04. Today, a limited follow-through so far. Continues to leave open discussions about the whole mid-March date action being a possible bull flag, though it is still by no means certain. The next chart to look at is euro against sterling. A bearish black Mariposa yesterday, an unusual move, I suppose, after 2 days of indecisive spinning tops. It nevertheless caused a finessing of the March to date downtrend, currently at 87.85, and was stopped in its decline, as has been usual these past 2 weeks, by the long moving average below, which is at 87.44. Today's cramped action is caused by the squeezing of the market between the downtrend and the long moving average. So, back to the idea I've mentioned a few times now, that the last 3 weeks may be a type of sharp double top action, and that we may have an initial target X on the downside in the 86.5 area. Still not that far, but finessing the downtrend and not breaching the long moving average dents the ability to get there. The next chart to look at is the US dollar against the Indian rupee. A bullish harami yesterday that set the stage for today's move higher so far with a new all-time high. I'd keep an eye on the short moving average below, currently at 75.65. It seems to be acting as a type of dynamic uptrend. The next substantial topside resistance is the projected 50% Fibonacci line at 77.39. That's once we have the consecutive closes over the recent resistance in the 76.35 to 76.45 area. The final chart to look at is the US dollar against the Brazilian real. A third bearish black crow yesterday. This one was a follow-on lower from the combined previous session's bearish opening black Mariposa and possible, though tough, bearish hanging man pattern. Yesterday was also the first proper close below the recent projected 50% Fibonacci line of 522.26. The next significant support below, should the market choose to continue that way, is the late March lows and congestion around the recent 50% Fibonacci line of 499.74. That about wraps it up. So in the meantime, good trading and stay safe in these markets and in real life.